Hi, this is Kurt Frankenberg with Radioactive Trading, and welcome to the free tools from Radioactive Trading. This is the risk-reward calculator. And before I go any further, I want to answer this question that's probably on your mind. Why would I want to spend 10 more seconds listening to this? Well, the reason is that the risk-reward calculator will help you to understand by proving it to yourself the importance of optimum position sizing. What's that? Well, did you know that you can actually be right more often than you're wrong when you're investing in the stock market and still lose money? That's right. You can actually be right more often than wrong and still lose money. Stranger still, you can actually be wrong more often than you're right and still make money. Pay attention, because in the next sequence of slides, I'm going to show you a principle that doesn't care if you use it to become rich or ignore it at your peril. It just works. It's a mathematical fact called the martingale. And this principle sorts money from the hands of those that ignore it into the pockets of those that embrace and use it, and does it on a daily basis. Let's assume for a moment that you have a way to absolutely control your maximum possible loss when you get into a trade. Now, at the same time, you'd be shooting for a modest, attainable, believable gain. Where should you set those limits? You know, knowing the right answer could make you wealthy. Controlling losses to an absolute finite number is called risk management. And properly setting your risk against its specific probable reward is the key to wealth in the stock market. This program will not teach you the how of how you do that. It'll only show you the result of making a habit of trading that way. There's good news. Another free resource from Radioactive Trading does show you how. Step by step, exactly how to set a trade up in such a way that you put all of your money into the market, but only a very small amount is risked to the downside. This isn't with a traditional stop order, all right? It's a legal and enforceable contract that I like to call stock insurance. You know, I was on a plane ride home from the East Coast, and the lady next to me asked me what I do for a living, and I told her that I teach people about stock insurance. And she told me a lot of people could have used that last week. That's true. Right after this demonstration, you'll see details on how to get these free resources: the sketch, the risk-reward calculator, and two others. But first, let's just get into the demonstration, okay? Here's the risk-reward calculator. It's the third iteration of a spreadsheet that I put together more than a year ago to demonstrate how this works. But let's say you have a believable target, a profit target of 10%. And most people will set a stop-loss order or something like that. It's really not reliable to use a stop-loss order, you understand. But they'll set it at a similar amount, 10%, and what they're hoping is that they guessed right when they set their trade. Now, let's put the probability of a loss at the same as a coin toss. You can actually adjust this too, okay, to whatever your trading record is like, okay? But let's start with a starting amount. This is also adjustable, of $10,000. We'll also take into consideration commissions, and once we run this calculator, it's going to give a string of winners and losers, and it's going to do all of the accounting for you, all the way down to the 100th trade. Okay? Well, in this example, with a 10% profit target and a 10% loss limit, if you had a bad trading record where you lost more times than you won, well, you'd end up in debt, okay? Let's run this calculator a couple more times. I do it by pressing F9, and ooh, here's a good record. If I was to win 61% of the time, 6 out of 10 trades, I win on them, okay? So I take my $10,000 and I'd roll it up to about $36,000. During that period of 100 trades, I may have seen a low as $7,500, okay? But I got all the way up there. Now, this is going to require some burning of midnight oil. It's going to require some good timing and, quite honestly, a bit of luck to get more winners than losers. But let's experiment with something. Now, remember, before I even do this, this is a random run of winners and losers. I don't know what's going to happen. I do know that I'm going to reset this profit target to something a little more modest, like 8%. And I'm going to set my loss limit to something like, 3.5%. Oops, that's a comma. 3.5%, okay? All right. Now, this time we had more wins than losses, and we still did very well, okay? $10,000 and rolled it up to $136,000. Well, that's interesting. We only had a 10% profit target before. Now I've only got an 8% profit target. But the key to this, and I can't go into all the higher math that's behind it, but the martingale principle guarantees that this is the number I've got to control, the loss limit. And it's absolutely possible to control the loss limit to this kind of a standard, okay? And I don't mean a stop-loss order. I mean a legal and enforceable contract. In case the markets crash, you're still fine, okay? Let's do this with some real trades. I did Citrix Online, CTXS, limited my risk to 2.8, but I made 8.67%. I don't know what the calculator is going to do. Oh, look, a terrible trading record. I won only 39 times and had 61% losses. And yet, even though that $10,000 saw a low of about 8,300, the end result over 100 trades is over 3 times my starting balance. Let's run it again. I'll press F9, and still a dismal trading record. I had only 45% wins, but that's better than 30s. Looky, took the $10,000 and rolled it way up. Well, if I was to get into Priceline, for example, its risk signature is a little higher, and I had a loss limit of 4.89. Well, my real money trade that I demonstrated in front of everybody, okay, I told them when I got in and when I got out. Look at this. If I made a habit of trading that way, of risking less than 5% and having 11.2% returns, well, if I won 53 times out of 100, why then that would do very well for me. Let's say I do poorly. I'm going to run this a few times until I have more losses than wins. More losses than wins. Look at that. If I had more losses than wins, I'd still do very well. Okay? So this one more time with Research in Motion. Research in Motion, one of the riskier issues I've traded. I had a maximum risk. I put over $11,000 into the market, but I only ever had the possibility of losing 8%. What was my return? Well, after 6 weeks, it was 16.22%. If I'm pretty good at picking winners, I'll do pretty good in the stock market. That's no secret. Okay, but even if I do poorly, let's see if I can get more losers than winners. There's a lot more losers than winners. Okay, 58% losers, and guess what? I still took $10,000 and turned into $35,000. This is the value of learning how to trade and limit your losses. Okay, let's go back to the presentation here. If you'd like to get more, all right, if you'd like to learn how to, even if you're wrong more often than you're right, still make money, okay, here's an idea. Send this video to 2 other friends or more and write me at kurt@radioactivetrading.com. I'll send you the sketch which shows you the details of how to set trades up like this, putting all of your money in the market but only risking a small percent. Heads you win, tails you don't lose much. That's skewed risk-reward, the principle that takes advantage of the truth of the martingale and sorts money into your pockets. This video is one of 4 free resources. Write me for more info on the others. You can get the risk-reward calculator that I just showed you. It's an Excel spreadsheet with instructions by sending a blank email to Kurt, K-U-R-T, @radioactivetrading.com. Put in the subject line RR Calc, and I'll send it to you with instructions, free. And I'll also send you some other offers of some free resources that you can get both from radioactivetrading.com and other sources on the web. Okay? All right, thanks. Bye for now. Happy trading.